How's it going out there? It's January 12th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. A lot going on today. Get the CPI going a little nuts, showing 7%, growing year over year. Fed yesterday saying, going to be aggressive raising rates, going to cut back on the bond buying program, but it could take a while and not really a time frame in the market, I guess. So that is a positive. Also, volatility in Bitcoin, where we saw the cryptocurrency fall below 40,000, hit 39, and then ricochet, bounced off of that level. And there was a reason why it bounced off of that level. There's someone that said it was going to bounce off that level. And this person has probably become one of the most powerful people in Bitcoin, which I'm going to go over all these stories, bring in the one and only Daniel Creech, CEO Research Analyst, Curzio Research. What's going on, man?
Good morning, Frank. One and only. I like that. Appreciate that.
I
back from Vegas. How was Vegas? Quickly, I know you've talked about it a little bit, but I have to admit, on record, I'm pretty jealous when anybody goes to Vegas and I don't get to go. So a little bit of me was excited to hear that you were a little frustrated with a few things and limitations, but all in all, no, I'm glad you had a great trip. You had a lot of fun videos. And I mentioned it on Fridays, frankly speaking. It sounds like you were at least flat to up on the tables. You did play a few slots and have some fun and unwind.
I literally played for...
You were working too much. You sent way too many videos. You were working way too much.
I know, way too many videos. But yeah, I only played for a couple of hours just to try to break it up a little bit. But yeah, it was busy. It was really busy there. I tell you, the Consumer Electronics Show was great. I covered that yesterday. You go to our website, see all the videos that we have. But I didn't go over... I went over some of the cool things, but some of the crazy things where it wasn't as crowded. I wish a lot of the majors had showed up when it comes to the auto companies, because that's where the fun technology was and showing off all those cars. But most of those guys didn't show up either. About 60% of the companies canceled, which left about, I think it got up to 800 companies in total that were there. I'm sorry, it was 800 startups. It was about 1,800 companies altogether that were there. Which is really cool. But I didn't go over some of the things that were like crazy. Like, you see these technologies, and you got to pay a lot of money to go there, Daniel. But there was one company, because they have a big sex thing now, which is like, sex health, they call it. And, some of the stuff is really cool. They had it was a very big presence. It started 2019. People don't really know this, but going back, I think 3, maybe 4 years, every year the CES, that week was the same as the adult awards.
Okay.
So, you do the math with everybody going crazy there and stuff, and it is Vegas. But now I think they changed that. But anyway, sex health became a pretty big theme. But one of the things was a little crazy. It was a device to stop premature ejaculation. Okay. So they say this happens into 1 out of every, I think it's 5 men, 6 men, or whatever it is. All right, I get it, even though that's not a male problem, that's more of a woman problem, I think. Which I don't know if there's going to be demand for that technology, but I know that I would never use it because, Dan, this is a device that you put underneath your friends.
All right.
In between your legs, right? I'm trying to be politically correct here. And
trying is the key word.
Trying.
There.
And
it's a family show.
When you're doing it, it shocks you.
Okay.
It shocks you. And apparently you're like, and I was like, do you feel it? Like, yeah, you feel it. I'm like, yeah, but wouldn't that, and it comes from an app. So I guess once it does that and you don't want it to do it anymore, you have to go on your app. I guess in the middle of intercourse while you're doing this, you're on your app. I have no idea. But apparently I got funded for like $1.5–2 million. And I'm just looking at that going, really? I don't know. I don't know anyone that would use that. I don't know, but maybe it's a good product. Maybe I have no idea, but that was kind of like, I just didn't get it. Like, I didn't get it. If I'm in the moment, you don't want that. Even if you were a premature ejaculator or whatever, I just didn't understand it. I didn't understand. Like, you're going to shock me. You're going to shock my balls during sex. I was like, are you kidding me? I was like, that's not, it's not actually on your, but it's below there in between, but isn't that going to take away from the fun? And I'm just, I'm going to show Daniel who's laughing at this, but that was one of the things.
See the kind of research that we do for subscribers and the hell you go through, Frank. That's got to be an interesting pitch to raise $1 million or $2 million on.
Yeah, there's the flying cars. I actually tried both of them out. I didn't fly in the car, obviously, but Yeah, you know, you like your pilot's license, but I don't think these guys understand like the FAA requirements and stuff. One company actually had amazing technology. It was smooth. It was like, you're riding a plane, and, you know, I rode a plane before, and I actually, you know, I won't say piloted, but it was, you know, a 4-seater, and when we were up there, he let me, you know, pilot the plane, which is very, very simple to do. I wanted to land it. He wouldn't let me land it. He's like, no freaking way. But, and it was good. The technology was good, but you kind of need your pilot's license for some of this stuff. So it's a lot of this stuff is concept. And I was just like, you know, this isn't coming out anytime soon. And then you had, Daniel, one other thing, which was a stuffed animal. So it's a stuffed animal about this big, right? And it's like, I think it was like maybe a bear or something. I couldn't even tell. But what it does is you put your finger in its mouth and it sucks on your finger. And it's supposed to, you know, alleviate stress. And
is this still in the adult section, or is
no?
This like
this isn't in the adult section. It's
thing?
Weird. It's weird. I mean, it actually it felt pretty good. It seems weird, but it felt pretty good. When you put your finger in there, I was like, "This is crazy." I'm like, "Wait a minute, that does feel pretty freaking good, right?" But I don't know who's actually going to do it, because all of us, and I was taking a tour. I usually take a tour before, see what companies are going to visit. They take it to the best technologies and the best companies. And you know, when I did this, I was just like, everybody felt weird in the group, like, oh my God, I can stick my finger in this thing. You stick your finger in the thing, and it kind of like sucks in your finger and has a little massage. But just technology, you're paying a lot of money for to get there. But the wow factor came from BMW, like I said, and that's what you want to do. You don't really want to talk about green energy and everything. We all, okay, whatever side you're on and how political you want to get and how concerned you are. Yeah, it's not the exciting story. And just for proof is, if you look at Jimmy Fallon had his show, and he said, you know, look at this BMW, you know, changing the color of its car. And I mean, that's what you want at the CES. That's
that
what
was
you want.
Cool.
It's the publicity. That's what you want. Because now, not only are you talking about that BMW, you're talking about their whole EV portfolio, which they let everyone test drive, which is smart. It was great marketing. But it was pretty good. It was a lot of fun. And thank you for covering.
Yeah.
Which was awesome, by the way. And you got some really cool feedback, which, they CC'd me on, which is great. And, just as you know, they're like, Daniel, you're great. Do this, and then the but comes, and everything before but is meaningless, right? And then they're like, but.
No, I greatly appreciate all of it. Great. I got a lot of things to work on, but appreciate the feedback, the email, just the time you take, criticism, encouragement, all good. Yeah, had a lot of fun. When's your next trip, Frank? When are we doing this again?
I don't know. I think it's the first time we're actually on it. It feels like a month, right? Would you take like 3-week vacation in like December or something, right? To go to Ohio like 3-4 times. I forget how many times. And then I went to the CES last week. But this is the first time we're doing this, definitely in a few weeks. So it's cool to get together.
It is.
Back
it's great
and forth
to be back.
And go over it. But
back in the saddle. Speaking of turning of inflation, did you notice inflation, higher prices in Vegas? Was everything through the roof?
Oh, they're charging you fees galore. I don't know if this is inflation or not, if this is normal, but I got a bottle of Aquafina water, about twice the size of your normal bottle, and I got breath mints that I'll carry around with me since I'm talking a lot during this thing, and it cost me $11.50, I think. $11, $12 it was. It was $12 for that water, which is probably $1 in the store. Maybe $1.75. I mean, so it was basically $2 a price I paid. It was $12. I said, and I even said, like, when they told me about it, I was like, holy shit. I was like, $12. I was like, yeah. I get it. It's a casino and you got to go there. But they, if you're on the strip, they bang you out a lot. And, we were able to go to a nice restaurant off strip, which is unbelievable restaurant. Italian food is great. And I couldn't believe the price. It was like half the price of every place else. So it's just like every touristy place where they bang you out. But yeah, you saw the inflation and you're seeing a CPI, right, Daniel? I mean, that number was 7%, highest since 1982.
Year over year, yeah. People
might say, well, the market's doing well on that. I mean, the Fed and everybody did a great job preparing and saying it's going to be at least at 7%. They did a good job. Powell knew that number before the testimony yesterday. But 7% is serious. And just to put that in perspective, Daniel, their number for the CPI for the last 7-8 years to keep rates low, they said, we want to, if we see it go above 2%, that was the benchmark, 2%, then we're going to raise rate. It's at 7, and we're still sitting at 0. Yes, we're going to see those rate hikes come, and everybody's raising that rate hike forecast now, even though the Fed, Powell said 3 at his testimony yesterday. Goldman Sachs said it's going to be 4 now. They changed from 3 when we actually did our last podcast about 3-4 weeks ago. And now Jamie Dimon said, I'll be surprised if it's just 4. So you're seeing inflation. I think the market's expecting it, and hopefully if it moderates, it's probably going to be a positive, and maybe that's why you're seeing the markets go up right now.
I think that's exactly why you hit it on the head with the narrative and they got in front of this. They're trying to manage expectations. You hear this term a lot, this soft landing versus hard landing. A hard landing would be where they're jacking interest rates up and really shocking or surprising people of how quickly and how fast they're doing it. The soft landing would think of the concept of, hey, we can guide this lower. We're going to have some bumps, some volatility, but overall, it's all going to manage out smoothly, and then we'll turn back to growth and all that kind of stuff. Whether or not whatever side of the argument you take on there, the reality is everything is up, Frank. Markets are up, crypto's up, oil's up, gold is even up today. And the takeaway there is you have to pay attention to the narrative because, to your point, when things are, everybody hates uncertainty. Markets hate uncertainty. I don't agree with everything they're trying to do, and I don't think they're going to have a lot of success. But to your point, Jamie Dimon made a great comment. He thinks the consumer is very strong. This year is going to be great too. One of his comments he made recently at the healthcare conference was, quote, "The consumer balance sheet has never been in better shape. They're spending 25% more today than pre-COVID. Their debt service ratio is better than it's been since we've been keeping records in 50 years. One more thing for you. You constantly pound the table in a good way about debt servicing. Don't just look at the amount of debt somebody has or a corporation has, but look at the ability that they have to pay that. So AT&T, everybody likes to talk about billions of dollars in debt, but they have billions of dollars in free cash flow to cover all those debt expenses. He's saying the consumer does. That's a big deal. That also helps the narrative of, hey, higher prices are here, but we're in good shape to handle this as long as they can control this 800-pound gorilla.
Yeah, and it's funny that you bring up AT&T because Joe is my nephew. I've had on the podcast a few times, and I was just going over a lesson with him saying, how to look at the numbers. And AT&T, I went over it with him yesterday and said, listen, everyone says AT&T, they're going to go out of business. They have so much debt, whatever, $170 billion in debt. And that's all people cite, but they don't look at the full balance sheet or the free cash flow coming in. And when I went over the numbers with him, I said, you're looking at the next most of his long-term debt due in 30s, 40s, 50s, whatever that they took out. It's investment grade debt, which, is the easy way out, saying it's okay. But when you really look at the numbers, to service their debt over the next 5 years, I think it's $30 billion or something like that. And they got $21 billion in cash. They're generating on average every single year, $25 billion in free cash flow, right? So $25 billion in free cash flow over the next 5 years is $125 billion. That's easily going to cover all of their debt due in the next 5 years, which is, I think it was like 35 billion due. And they have 56 billion on top of that in liquidity. So, revolving credit lines and stuff. So you have to look at the full picture. I know it's a great story to say, holy shit, they got more debt than anything, but AT&T just gets checks every single month. Free cash flow is the money you get back when everything else is paid. It's remarkable. It's the cable companies. It's that constant payment coming in, and you have to look at both sides. And that's what Jamie Dimon was talking about, where you look at the consumer, their home prices are up 18%. The average price, just to go over, Daniel, so basic human needs such as food, heat, shelter, global food prices are up an average of 27%. Lumber prices. Remember, lumber prices are supposed to come down. Yes, they did come down, but they're up 40% in the past 4 months. Not a good sign with interest rates going higher. And we're looking at mortgage rates for 30-year at what, 3.6, 3.7? They were I locked in at like 3.2 not too long ago. So it shows you how, rates are going up. You're looking at heating costs up 30%, oil up 43%. This is all year over year. And again, we're hoping this moderates. The consumer is in good shape. I mean, you're looking at household wealth is at record highs. And a lot of it has to do with, money being tied up in your house and that home value going higher. Wage growth is up as well at 5%. But, how long can this continue where what happens if we put price controls in, which was done when we had massive inflation? That means you're limiting the amount of money you can make, which is limiting the margins. Now you're not making those margins. Companies are able to pass off the higher costs, but what if they can't? And you're seeing that. You're seeing people change their habits right now, not going to certain restaurants and not going to on vacation, and saying, okay, maybe we'll wait. Or, when you're changing those habits, that's what you have to worry about, because if prices stay high, consumers may be, saying, okay, our expenses are up through the roof. Let's play it safe and let's cut back. And that could happen, and it is going to happen if inflation stays high. But I could tell you the Fed's really worried about it, Daniel. And
yep.
They should be. I like what they're doing now, because what did they do 9 months ago, 6 months ago, 3 months ago, which we said this is a joke. They're like, it's transitory, to worry about. And we were like, F that. And we were like, there's no, everybody, you don't have to be a genius. All you got to do is not be an economist, and you got this right. Right? Oh, that's all you got to do. Don't be an economist and you got this right. Because they're going to look at other things in the past. This has never happened before when you're handing money directly to people. Most economists have a lot of money. They don't understand the markets. I don't even know if they do their own shopping or their own driving. Everyone out there saw the higher prices in every single thing that they did, and that wasn't going away. You handed checks directly to businesses. It wasn't like the credit crisis where you backstop the banks. This money flowed directly into the system. It bypassed the whole working angle. It's, hey, you need money? Here you go. Here's a check. You got a couple kids? Here's a check. You got a business? Here you go. You don't have to pay it back in a PPP loan. It was going to result in inflation. We're hoping that, we don't see higher inflation and, looking for moderation of this thing to come down a little bit, and that's going to be a positive. And there's a lot of hope there. But at least the Fed now finally is going over the top, saying we got to do this quicker. Inflation is a problem. It's not transitory. So now that sentiment has changed and it's resulted in a lot of volatility in the markets. But at least the sentiment is right now where they're freaking worried because they weren't worried, 9 months, 6 months, even 3 months ago. Now you can tell they're worried. Absolutely.
And you make a lot of good points there. For investors to take away from that, be boring. And Frank and I have joked about this, and I say this as a compliment. But today's, for Curzio Research Advisory subscribers, the new pick, I would say is boring. Frank, you're going to agree. I mean, hell, it's not that anybody hasn't heard of the company you're recommending.
Mm-hmm. Yes.
But it's very easy to overlook the forest from the trees type deal. And it's okay to be boring. I need to get better, Frank, and beef up the marketing side on how to be boring and sell that idea. Because last week when I was filling in for you, I talked about, can you think of a better stock in general to be boring and keep things as simple as possible for an inflationary time other than Berkshire Hathaway?
Yeah.
Inflation protection across railroads, transportation, insurance. Not to mention, I liked what you said earlier about AT&T and going out of business. As an investor, and I'm not talking about trading here, but as an investor, you want to talk about total risk of loss is your ultimate risk. Going out of business, going to zero. Berkshire has how many $100 and some billion in on their balance sheet? Mm-hmm. Google, real quick here, when I was in Ohio on my 3-week vacation, as you pointed out earlier, a friend of mine said, man, I want to be in the stock market. I'm tired of thinking about it. I put a bunch of money in Google. He was half asking my opinion, more just telling me. And I thought, well, that's smart because you're picking a great, well-known, great business and you're just going to camp out there. Frank, Google's trading at around 25 times forward earnings for next year. Its 3-year average, and again, take all this with a grain of salt, is 27. So you're getting it a little bit below its 3-year average.
Yep.
Again, are you worried about Google going out of business? And I'm not saying put all your eggs in one basket. I'm simply saying this is how to keep it simple and it's okay to be boring. It's trading below its 3-year average on its forward PE. It's about 20% higher than the market of 21, but yet it's blown out earnings and revenue growth. And it has the optionality because of all the strength on its balance sheet. It's huge high margins. It can do whatever it wants. Thinking about it and investing during tougher times, inflationary times, that's what I want to get across, and hopefully I think we can provide a lot of value to investors to think about that. Hey, tougher times, more tough environments are coming ahead. Inflation is a huge shift for the last several years in markets, and that's going to funnel down into markets, but you can still make a lot of money. And I don't want to say it's easy and sound arrogant, but you can make a lot of money off boring businesses that, to your point, just like unless you're an economist or overthinking it, you can put yourself in a great position to benefit.
Yeah, and also, Daniel, when you're looking at comparing this to the 80s and where inflation was, it's a different time to the point where you're looking at high double-digit inflation in the 80s, but you know what the savings rate was? It was like 8-9%.
Mm-hmm.
I mean, that's pretty cool. So if you have money, right, one, if you have money in the bank, higher rates are good. Your banking companies, your margins are going to expand. Insurance companies, it's good for. So, you're looking at even... You see oil companies do well, right? And that's, maybe not so much a function of interest rates, but more of a function of just, supply-demand issues. So things do work in this environment. But now you're looking at rates skyrocketing. And, let's see, with savings rates and, inflation was still, negative in the negative. But, people fail to mention that when, in the 80s, holy shit, getting a mortgage, 18%, whatever it was back then.
Right.
In the early 80s. But, your savings rate, 8-9% is pretty cool. So,
well, not to mention, we're not huge bond guys, but hell, if interest rates spike and you could go park money in something and earn 8%, why the hell wouldn't you?
Yeah.
We love stocks. We're always going to find great stocks like that. But hell, we'll be the first to tell you, go buy a CD for 3 years and earn 8% annually.
And
absolutely, it's about compounding money. It doesn't matter what vehicle you use.
Listen, guys, it's if you look back at history, it's been value, then sometimes growth, value, sometimes growth. It's been a pure growth market. right? Dan, it's been a pure growth market since the credit crisis. Like growth stocks just outperforming, and that's fine because you had interest rates super low, more money into the system. But now you're seeing the transition into the value. You're not seeing the transition out of the market completely. The S&P is not getting smoked. There's certain areas that are getting smoked, right? So you have to be careful. But when I look at, you mentioned the stock being, boring to the point where people know it. But when you see the story and you see the video for CRA, which comes out today, it's very, very exciting because this is a company that's growing tremendously. It's trading at a much cheaper valuation in the overall market. Yet it's going to be competing and right now taking market share from NVIDIA, which is an $800 billion company, right? So, plus seeing this company at CES, it was remarkable. But more importantly is they're paying a dividend. Dividends are going to come into play now. Dividends are going to be huge now. Yep. So if you're paying a nice yield, you have lots of free cash flow, you're buying back your stock, which you're going to see massive buybacks. A lot of these companies have a lot of cash on their balance sheet. Buybacks are good. I mean, you look at where the market is. Where's the S&P? It's up 3% off its highs. All the companies that bought back their stock for how many years, it was a great buy on average, right? I mean, a lot of these guys, Apple's buying back their stock. A lot of these guys buy back their stock, right? Reduces the shares outstanding, increases, your share percentage-wise, but it's, of ownership. And you're seeing that benefited these companies. Lots and lots of buybacks are going to come over the next year. You're going to see probably record buybacks this year, which is going to put a floor on some of the companies, which means be careful buying high growth names that, are expected massive growth, 5-7 years. ESG companies, you're looking at marijuana companies, you're looking at EV companies, right? Tesla's going to get away with it. It's fine. They're growing still. Tesla's the only company out there that really has a car on the road. All these are coming. Let's see if they come and how they do, the manufacturing part and getting these things out. I still don't know how they're going to do that. In the year time frame that they're expected, the year 18-month time frame. But a lot of these companies and their growth models going out really, really far and not worrying about earnings and just saying, hey, we're going to see sales growth, but we're going to report huge losses. Those are the ones that are getting hit the hardest right now because it's not going to be as easy to borrow money. It's not going to be easy to raise money as, capital is going to get, harder to come by as you see higher rates. It's not going to be as much as an easy monetary policy. But that's what's going on now. It's more of a shift in allocation, not, hey, run away, run for the exits. Holy shit. But a lot of you are probably sitting on companies that are down 35-40% that just got wrecked if you were a little aggressive. However, those are the same companies that are probably up 200-300% off their lows during COVID. So you have to look at it that way.
Well, doesn't that depend on when you bought? Tell that to the people that bought recently and are down.
I know.
That's it. Hey, that's the world we live in.
Look, we've done great in our crypto recommendations. Our average crypto stock is down 20% over the past month. However, 2 of the last 3 that we recommended are up huge. And the ones that did cut, which is good because we had a lot of subscribers over that time frame, and the ones, Daniel, that are down are ones that we were up 30x, 35x, 20x on that took a breather. And the ones also, some of the new recommendations that we got into, we have small positions where we could add to it. Now you're seeing Bitcoin come back. So a lot of it is, being smart about your allocation, not going all in, limiting your losses. Nobody likes to take losses, but you got to limit your losses. You can't, you're going to be more than taking a massive losses. You're going to be focusing on that loser more than anything instead of focusing on the new ideas, some other names that may have come down 30-40% that you're like, holy shit. Maybe you love Rivian here in 80s, which was whatever, 130, 40, 50, wherever it was.
Yeah.
Some of these, really good names that makes it Roblox Metaverse, one of the few companies that's actually has applications for the Metaverse where Nike signed up for them and that's come down. That is reporting, solid earnings and stuff like that. But some of these names, you'll be focusing on new ideas instead of focusing on that one loser and going, why the hell is it down? I mean, a good example of this really quick is Under Armour. We recommend Under Armour. They blew out the quarter twice. We're down about 5% on our position. Amazing company. But if you look at all apparel makers on a whole, that industry was down 7% as on yesterday's low for the year. Apparel retailers, right? So it's not, you can't look at it and say, wow, Under Armour, what the hell happened? It's not that. It's, more sector related or industry related. But, those are the things that you're going to have to look at this year. It's different. There's fundamental things going on with the market, fundamental changes. It's a different landscape, rising interest rates, tighter monetary policy. It's going to take money out of the system. And you're seeing it. You're seeing it in certain stocks, certain sectors, but not everything's crashing. Some things are really, really doing well. And allocation is going to be a very, very big thing for this year and probably the next 18 months as the Fed is in this tightening cycle. But we wanted to talk about Bitcoin real quick because we saw that come down, a ton. But it was interesting there because it stopped at a certain level at around 39,000. And what's interesting to me is Novogratz of Galaxy Digital And this is when it was, I think it was 50, 47, 48. And he was on, he's been on CNBC a lot. They interview him, and it's a good interview. Politics aside, I like the guy. But he said the interesting level is around 39, 38. And he was saying that's an interesting level because institutions want to come in. And sure enough, it hit that level, and it ricocheted. It's up like 10%. It's like 43 to 44,000 right now. It's interesting that he knew those levels.
Yeah. I believe it's closer to 44 right now.
44, yeah.
43.
It's 43 to 44,
yeah. And it was somewhere around 38 or 39.
It's at 43, 470 to be exact.
I try not to be a cheerleader, but everybody knows that, and I talked about this more last week when I was filling in, Galaxy Digital is by far my biggest holding personally. I'm down on it because I had to start buying after we recommended it, which is fine. I like the long-term thing. Mike Novogratz, to your point, has to be one of the most well-connected guys. He's brilliant from the investment banking to bridge that crypto investment world, in my opinion. And yeah, he's talking to everybody. He knows what's out there, and it's encouraging to see the bounce. And who knows what could happen? That doesn't mean it couldn't turn around and go down further. But it is encouraging to know this is still early in the adoption stage, even though it's high in price. And it's great to see people step up and start buying. And I know people that are buying. I'll continue to add to certain positions. It's hey, it's emotional. It's doing what we preach, and we'll see how that turns out. But the odds, the reasons that I'm still bullish on Bitcoin haven't changed, and lower prices being backed up by action by bigger money is great to see. Me still bullish, Frank.
I have to say that Novogratz. And there's a lot of people who are Bitcoin crazies out there that have been, in this thing for a very long time. I'm going to say that Novogratz is probably the most powerful person in Bitcoin. I may get some pushback on that, but I'm going to tell you why. Because through Galaxy Digital, that's where the institutions go. To learn about Bitcoin, to see what their allocation to Bitcoin is going to be, to understand how to do it. And that's why he knew at that level of 39, 38, we could break through those levels, but he said it's an interesting level because Goldman Sachs goes to Galaxy Digital to trade futures. They trade their futures through Galaxy. Morgan Stanley, right? Those are the two biggest investment banks on the planet, right? Everybody goes to them when they're going to do the biggest deals in the world. Morgan Stanley's partnered with Galaxy to offer their clients access to their Bitcoin funds. They have partnerships with tons of institutions. This is where they go, where especially, when it comes to banking and everything else is, hey, let's go to Galaxy Digital. And that's why I said this company is more like the Goldman Sachs of Bitcoin. But the access that they have, when I say most powerful, I'm not saying that he's been in it the whole time, but the fact that there's the people he talks to has trillions in assets. They have to allocate money to alternative assets. They're looking at certain levels to do it and saying, hey, if this comes to this level, this is what we want to do. This is how much is going to be injected in it. That makes him an incredibly one of the most powerful men in Bitcoin, whether you like it or not, because he's the one that's directing institutional capital right now. And that company's going to get bigger and bigger. He's got a good reputation in this space. Almost all the companies that I look at in crypto intelligence, Daniel, is whenever I look at their financings or it seems like every good name that I'm looking at, Galaxy is on, and they're one of the early backers. And now you're seeing a bunch of venture capital get in it. But even for our token, if you want to invest, you want Galaxy. Galaxy has access to everyone. It's almost like having Goldman Sachs as a partner, Morgan Stanley as a partner, and that power behind you. And they have that. So, when he was saying, 39, 38 is going to be a very interesting level, when it was at 50, 48, 47, to see as soon as it hit that level, bounce right off of it. Look, nice call. I'm not saying it can go lower, but there's tons of demand right now for Bitcoin from the institutional level. They were late to the party. It's a $2 trillion market. It's liquid. And most importantly, if you're looking at the hiring from JPMorgan to Wells Fargo to Citigroup to all these banking companies that used to hate, they're all hiring like crazy for crypto and crypto experts. They're going to build out these divisions because they have to, because their clients want it. They want alternative assets. I think more people understand what's going on with the dollar at a young age than ever. And when I was 25, I couldn't tell you anything about, the dollar or anything. Again, I was in the industry and stuff and stocks and stuff. But to hear this from mom and pop investors of how the dollar's getting destroyed, all this money printing and stuff like that, and the younger generation growing up in digital, 100% digital, just growing up in the streaming world, growing up in everything digital, it's Bitcoin is their currency. So this is here. This is going to happen. My prediction was always like, hey, this is going to 100,000. I didn't say this year. I didn't say next year. I said I know it's going to 100,000 probably over the next 3 years. When it does, the companies we have in this portfolio are going to do great. A lot of them have done great. And now that they've come down, we're going to be adding to these positions in our next newsletter, which is going out probably around Friday. It's supposed to go out last week. I was at CES. I met with a couple of companies in the industry. But Bitcoin, I'm bullish than ever. These conditions, what's going on right now, is very, very bullish for Bitcoin. You might say, well, higher rates, not too good for gold. The negative real interest rate when you account for inflation is well into the negative. That's why gold is going higher now. I think gold's going to have a great year. And I think Bitcoin is providing an unbelievable opportunity for you to buy it down at these levels.
Well said. It's an exciting story with Galaxy Digital. One last point. It's great. It's a great opportunity in the present to invest in a business mindset that I believe has many ways to win. You've covered those from venture capitalists to everything else, connectivity. And if you believe in that, you can either recommend it as we've done and invest in it. And if not, no big deal. But yeah, it's great to take advantage of this as it unfolds from an investing standpoint in a business over time as the adoption kicks in. And it'll be exciting. And let's hope we're right.
And guys, listen, learn. Just if you can, learn as much about Bitcoin, about cryptocurrencies. There's so many different sites. You can learn through our site at CurzioResearch.com, which is fine. We have a lot of free information, especially with our token and everything, because we have a security token, which is going to be trading in just a couple weeks. We were going to trade it towards the end of the last year, but we want to do like a nice marketing campaign on it and launch at the right time, which is good, which is really, really exciting. So we didn't want to launch it in between, the holidays of New Year's and Christmas, which, we're not going to see a lot of people, knowing about it, finding out about it. So now we're going to do it in the next couple of weeks, which is very, very exciting. But try to find a place where you could find free stuff on it. We have an expensive newsletter. We're going to try to come out with a very low price newsletter on this so people can learn more, because there is a learning curve. It's not that easy. With us, we do videos. I do specific videos. I'm showing you the sites that I use, free sites, but just start learning about it because it's here. It's a real trend. It's not going anywhere. There's a lot of shit in this industry, so you need to listen to someone who knows what they're talking about. But this is an industry that's here. The technologies, the innovation, that's where it is coming from. That's where you're going to see metaverse come from. You're seeing DeFi, which is massive. A lot of these stocks are getting hit a little bit as Bitcoin, sold off. But you're looking at DAO. You're looking at just so many different technologies, security tokens, NFTs. It's really, really exciting stuff, and it's going to be around forever. So definitely start educating yourself because there's going to be tons and tons of ideas, and I'm going to bring you lots of those ideas to our Crypto Intelligence newsletter. So Dan, I want to say thank you so much for coming on. Nice to see you after a month, so pretty cool. Don't take too many more vacations because we need you around here.
Hey, wonderful.
and
always great. Cheers, everyone.
In all seriousness, great job with the podcast. Really appreciate you filling in. I might have you fill in early next week since I'm going on another business trip to find new ideas. It's an awesome business trip I'm looking forward to in the Bahamas. A little bit of a pain in the ass to get there. Since you got to have a negative test before you go, negative test when you get back. And now, it's just a little crazy, but still, I may have you fill in on Tuesday and I should be back Wednesday, back in the saddle, having fun and new ideas to share. So thanks a lot, Dan, for covering for me. And I know that a lot of people appreciate it and you got a lot of good feedback. Seriously, most of it was positive.
Yeah. Thank you. Happy to do it. Look forward to the next time.
All right, man. So that's it for me. Questions or comments? The email, frankcurzioresearch.com. If you want to say something to Daniel and give him feedback or yell at him or whatever, what's your email, Daniel?
Daniel at CurzioResearch.com.
I love making you say it. I don't do justice when I say it. So anyway, again, frankcurzioresearch.com, questions or comments. Be on the lookout for the free report. It's absolutely free. I'm going to outline the biggest trends at CES along with 7 stocks on my watch list that I like. Again, it's going to be absolutely for free, just a recap of everything. And you can go to our Curzio Research website to look at all the videos, which I encourage you to, because it's entertaining as hell, and you're going to see some ideas there, and then different trends that we were covering, metaverse, smart homes, lots of good stuff. But I'll have that report out early next week for you. And again, it'll be absolutely free. It'll be on our website, and I'll let you guys know. So really appreciate all the support, and I'll see you guys tomorrow. Take care.